Thankful Thursday with Local. This is Ritu Desai with Scenes and Property or DMV Realtor. Again, it's my honor and pleasure to record part 2 of my Thankful series with Sarah and Toula. And today we're going to be talking about the 1031 exchange. That's correct. As a realtor, you come to me and say, Ritu, I built a lot of equity. I want to split it up into multiple properties. How to do, what to do. And these women, they are part of their website is 1031exchangegroup.com. And as part of their firm, S&T Law Firm, I know this is your second subsidy that you offer the services. So let's talk about 1031 exchange. So can you tell me, to my viewers, what is 1031 exchange?
So a 1031 exchange is when you hold a property, real estate property, a real estate investment, and you hold it for investment purposes. So it only applies to a piece of real estate where you derive rental income from it, or you hold it for investment purposes. It does not apply to your primary residence. So that's the first. That's a very first important part. So you're holding, just like you described, Ritu, you hold this asset. Let's say you have a house in Fairfax that you've been renting out, right? And now you want to, you've decided that you can sell this house in Fairfax and buy, I don't know, 2 condos in Dewey Beach, okay? And so that's what you want to do. Well, you've held this house in Fairfax for 20 years. And so it's greatly appreciated in value. And your concern is that you're going to have to pay capital gains taxes on the increase of the value of the property. You've paid up your mortgage. You know, you bought it, it was worth $250,000. And now 20 years later, it's worth $900,000. And you don't want to spend the taxes on paying, you know, those capital gains taxes on that gain. So you have a mechanism available to you called a 1031 exchange. It's a very creative name. It was named from Section 1031 of the tax laws, the federal statute, and what it allows you to do is take the proceeds from the sale of your Fairfax property and roll it into purchasing your subsequent property or properties. The key factors, because it's a tax exemption, as you can imagine, the IRS has very strict provisions. There are timelines involved. There are some requirements as to who can touch the money and not touch the money. And those sort of formalities have to be respected. Otherwise, the exchange will fail and the IRS will come knocking on your door for capital gains taxes.
Ooh, that's scary. So speaking of the timeline, what's the timeline? I'm ready to list that property. We have a buyer in this market. Everything sells within 48 hours. What's the timeline we're talking?
So the total timeline from the closing of the sale of the property that you are what's called relinquishing, you're letting go, you're selling, and the property that you're acquiring is 180 days. Okay. A very important time in the middle, firm deadline. And as Sarah said, the IRS code is very strict. There are no exceptions for any of these, for any reason, market conditions, anything else. But there's a 45-day identification period. So you sell on day 1. By day 45, you have to identify in writing what property you intend to purchase. This can be very tricky when the market is moving, when you have to identify and then get in and do inspections, and maybe the inspections don't go as planned. And so there are times that, you know, best laid plans, these exchanges don't go through as planned. When they do, it is a huge benefit because, as Sarah said, it's not a full exemption, it's a deferral of taxes. It's taking those capital gains and basically suspending them until a future time when they can be calculated and applied when there's an actual recognition period. But to answer your question, it's a 180-day total timeline with that 45-day identification period, very importantly, being a part of that process.
Does IRS give an exemption or appeal? Like, say, as you said, in the fast-moving market, things fall apart or something comes up and there's no inventory. I can't find a home in 45 days. No.
They will happily collect their capital gains from you under those circumstances.
That is scary. That's scary. And when you say 180 day Toula, do you mean to the closing? Like you have to be settled in again?
To the closing. So,
It's from closing to closing.
From closing to closing is 180 days. And very importantly, the money is held from one closing to the next by what's called a 1031 exchange intermediary. And so the separate company that Sarah and I have is it's a qualified intermediary. The title company wires the money at the time of sale to the intermediary. The intermediary holds the funds, and the funds are then wired to the second title company. There are a couple of really hard and fast rules about 1031 exchanges, one of them being that the taxpayer cannot have control over the funds during the exchange. And so those funds have to be structured. There's paperwork that's in place. There are some other rules involved that we can get into if you want to go into more detail, but it is very structured.
I'll let the pro like you and professional guide us, because when I'm ready to sell it, I know whom to call before even getting myself putting that for sale sign in front of my investment properties.
I think one of the very important things to remind people is that you have to think about this. Don't wait till 2 days before your settlement to think about, oh, maybe I want to do a 1031 exchange, because then you start a fire drill that's not really necessary, right? So have that conversation early on, whether you're ready or not, or you're going to do one or not, fine, but let's have the conversation earlier on so that by the time you make your decision, we're ready to go. By the time settlement comes, we're ready to go, and nobody's sort of, running around with their hair on fire.
I'm with you. No, realtors don't like the fire drill also, because what our clients make us do sometimes, oh my God. So going back to 1031 exchange, what's the dollar amount? Because I know there was some confusion. If I sold the property at $500,000, they bought it for 100,000 20 years back or 5 years back, and it's valued now $500,000, that townhome, do they have to reinvest 400,000 or $500,000, or only 100,000 what the initial investment was?
So these are great questions. So you can do a complete exchange where all of the funds are reinvested into the new property, or you can do a partial exchange, which shelters part of the money from transfer. There are more complicated formulas. You have to factor in mortgage versus equity, and whether there's been any depreciation of the original property on the taxpayer's tax returns. And so when we're contacted, the first thing we do is we have the taxpayer contact a CPA to do a full evaluation, take a good look, make sure a 1031 exchange makes sense, and that they can do those calculations to know exactly how they need to invest funds into the new investment property.
That totally makes sense. So this goes back to your early thing. You've got to plan this out. You cannot just do last minute things that I want to go out and sell it. And then the last question I have for you ladies is that any other pitfalls, like is there necessary that they have to invest in real estate? Can they invest in a horse or some other kind of property or Bitcoins in this digital market the way we are investing?
So this is a great question. I'm going to start, and Sarah, I'll let you finish. It used to be that 1031 exchange was much more open. You could exchange any kind of an investment. So it could involve stocks, it could involve livestock, it could involve inventory for a business. And the IRS code was amended so that this is now, it only applies to real estate held for investment. So you're selling real estate. Now, real estate can be vacant land, it can be a warehouse, it can be a parking garage, it can be a condo. So you can sell one type of real estate for another as long as they are both held for investment. One of the other very strict rules is that there's a rule called the same taxpayer rule. So the same taxpayer has to sell and buy. And this comes up, there's no exception even for spouses. So even if I bought a house before I was married, and now I have a spouse, if I'm selling that condo that I now have been renting out for 5 years, and I want to buy another investment jointly with my spouse, technically that doesn't meet the requirements of a 1031. So again, advanced planning is required. There's a 2-year hold on either side where the ownership has to mirror exactly. I'll let Sarah finish.
Yeah, no, I think it's important. The other thing I want to add is that there are more complicated exchanges where you can sell a single family residence and buy, for example, a share of a hotel. There are ways to organize them. 1031 exchanges can be very simple, as in selling one property to buying another property, and then they can be immensely complicated. And so I think your first, if I could give advice to people who are thinking about these, your first step is to have a conversation with a CPA who understands 1031 exchanges, because not all CPAs do 1031 exchange work, and then have a conversation with an intermediary, and then formulate your plan, talk to a realtor, but have those conversations up front so that you understand the parameters of what you're trying to do.
I mean, this was fantastic advice, guidance, information, because so many people are uneducated, because a lot of my clients, I know, they bought something as a single person just to take advantage of tax credits. They get it rather than renting it. And now they're married, they have kids, or they want to buy a larger property, what they want to do with the old one. I think it's a great advice. I really appreciate you taking time today and sharing about 1031 exchange. Thank you so much. Your information, and I'll leave it out in the descriptions along with your social media links. So please follow and reach out to Sarah and Toula if you have any questions regarding estate planning. They're like, I feel like you're one shop for a lot of things, from estate planning, 1031 exchange to forming LLC. So I'm so grateful to have a friends like you in my network where I can reach out and ask these questions.
Thank you, Ritu.
Thank you.